You're listening to Real Investor Radio with Craig Fuhr and Jack Bevere, where we cover advanced real estate investing topics to help you stay ahead of the curve in your real estate investing business. Welcome back, everyone, to Real Investor Radio. I'm Craig Fuhr with Jack Bevere from the Dominion Group. Jack, good to see you again.
Absolutely.
We've been talking with Josh DeShong. If you missed the last episode, I would encourage everybody to check it out. Josh is a real estate entrepreneur in the DFW area, and we've been talking about his businesses, big wholesaling operation with Myers Home Buyers, not Smitty sells shitty houses. It's Myers Home Buyers. And we'll get back with Josh in just a second. But Jack, I wanted to talk to you quickly because last week you were in Vegas. Dominion Financial was obviously at the National Home Builders Conference, but you mentioned as well that you were at the Structured Finance Conference. During the break here between episodes, we were talking with Josh about securitization. Dominion obviously went through a securitization first, I believe you said, Jack, a couple of years ago. We talked about sort of the pain and pleasure of that. Maybe you could jump in to tell us what you learned, what's going on in capital markets at the Structured Finance Conference.
Yeah, so it was really interesting. I mean, basically, the Structured Finance Association does a conference once a year in Vegas, and thousands of guys in blue suits show up from New York and converge in Las Vegas and hang out. There's a bunch of conferences and a big exhibit hall and a bunch of breakout sessions. But mostly it's a big opportunity for everyone to do a bunch of face-to-face meetings with all the big banks are there. They have tons and tons of rooms. JP Morgan and Goldman Sachs and Citi and Credit Suisse is now Atlas, and all those folks have rooms there. So it's a good opportunity for us to meet everybody who's deploying capital into both the single family rental, the DSCR loan space. So all the loan buyers are there. The rating agencies that rates some of those deals are there, and as well as warehouse lenders for kind of larger lenders that are lending to private lenders secured by fix and flip loans. And so one of the really interesting, timely things that happened just before the Structured Finance Conference was that Torak did the first rated securitization of RTL loans, so fix and flip loans. And for those that don't know, Torak is an aggregator of fix and flip loans. They also buy DSCR loans. And so what was really interesting about this is that all the previous securitizations that have happened, which have been, I think, happening since 2017 or 18, Kiavi really started that, as well as Torak was an early issuer. But those have all been unrated deals. So why that's important is that, if one of the rating agencies, and you only really need one, is willing to put a rating on your securitization, that opens up the market for those bonds to insurance companies who have mandates, insurance companies and pension funds who have mandates that to buy securities that are rated. Many pension funds and insurance companies are not able to, from a regulator point of view, the regulators won't let them buy unrated deals, unrated securities. And so that makes the market thinner, which makes pricing a little bit higher for the bond issuer, which makes pricing a little bit higher for the ultimate borrower who's borrowing that fix and flip money.
Is that because it's seen as more risky, Jack?
It's seen as more risky. I think that's not an illogical comment, but it's actually more of a regulatory issue. And the inference is that, hey, if it's really safe, then why wouldn't the rating agencies issue a rating, right? Well, it can be really safe, but the rating agencies just don't have enough information yet on how it's going to perform and how it's going to perform in stress tested environments. And I think that's really been more the driver for on the fix and flip side, is that back in 2018, everyone was like, hey, yeah, this is like great paper. Everyone feels really good about it. But we're just seeing how, but but we don't have any data on how it's going to perform under stress test. And now we've had 2 stress tests, right? COVID, and then a 400 basis point, 500 basis point increase in interest rates. And so now really it's only one rating agency, DBRS, has enough data that they got comfortable issuing a rating to the Torac security, the Torac RTL deal. And so it's good for the industry as a whole, because with more access to capital from pension funds and insurance companies, that money ultimately is flowing down to Main Street, and that should decrease the cost of fix and flip loans in the long run, which obviously that's great for everybody. And so that deal priced a couple days before that SFA conference, and so that was a big talk of the conference. Was hey, who's going to go next? Torac's an aggregator of loans; they're not a direct originator, and so is Kiavi as an originator or some other originator going to go next to do a rated deal? There's a lot of annoying details, the differences between an aggregator doing a securitization and an originator doing a securitization. So there's a lot of question marks still there. And so that was a lot of the topics of conversation out there. But it was great because it priced pretty well. It priced I think it was weighted average 225 basis points over the 2-year treasury for almost 90% of the capital stack. So pretty high leverage at fairly reasonable credit spreads, which again is good for the ultimate borrower, as that cost of capital decrease should be able to be passed through to the borrowers. So that was a really interesting topic there at the conference.
Jack, what was the size of that deal? Do you know?
I should know that. I think it was around.
I love when I stump them, Josh. It's
around. I think it was 175 million. I think it was 175 million. Yeah.
Okay.
So they're big. You can't cost effectively do a securitization at really less than 125. 200 is kind of the real number you want to get to. So this was even relatively small for a securitization, particularly a rated one. The other interesting kind of feedback from that conference was that the credit spreads on non-QM securitizations are tightening up as well, and so that's good for DSCR rates. The tighter the credit spread on the non-QM securitizations, the lower the rates that lenders are ultimately able to pass through to borrowers. And so while the 5-year treasury has not been cooperating, given the PCE report that we talked about last episode, credit spreads are starting to come in a little bit. So there was kind of just a general optimism among the blue suits, which was, good to see, because hopefully that means that all of us will have a lower cost of capital on a going forward basis.
So when you speak of credit spreads, Jack, it's the 5-year plus that spread that which is the aggregator, right?
Yeah, which is ultimately the nominal rate to the borrower. So if you're being charged, if the 5 years at 5% and your interest rate on your loan is 7%, well, that's a 200 basis point, 2% credit spread. So yeah, super interesting conference. And then, because I hadn't eaten enough and drank enough in Vegas for those 2 days, I stuck around for an additional 2 days because the National Association of Home Builders Conference was Tuesday, Wednesday, Thursday, and I'd never been before. Oh my gosh! I highly recommend.
I was absolutely shocked at your exuberance when you came back over just the quality of the people in the room, how well it was attended. And it was Dominion's first time at that event, right?
Yeah, and it was really good. It was fun just, because we're in the construction and renovation business ourselves, just walking around the millions of square feet of exhibitor halls. It was crazy, dude. I'd walk into a room and I would just start walking down an aisle, and 5 minutes later, I'm still walking. Just didn't stop. Just, I think the thing must be a quarter mile long. It's wild. And there's 4 of them. There's 4 different halls. So it is humongous. I had never been to a conference so big. And it's 90% suppliers and vendors, folks showing what the latest and greatest in building technology is, more cabinets than you can shake a stick at. There were these guys that had these doors that were 8 feet wide and 30 feet tall. And they had 15 of these doors that you'd put in, I don't know what ungodly, $30 million house or whatever. You're, opening the door to a freaking castle.
And they just decided to
cool.
bring those to the convention hall.
Yeah, dude. And they were literally building their displays. It wasn't like, you go to one of these like, real estate or finance conferences and like everyone's got their booth and like the fancy booths have like a little overhang. No, these guys were physically building with like 2x4s and hanging tape, mudding drywall and painting. There was this one that across from us that had this humongous water feature that they built like before the conference. It was, whole nother level of conference. The builders are like,
wow.
hold my, you want to see a display? Hold my beer. I'm gonna build you a display.
So Jack, I once
really
attended it was the International Tobacco Association. It was really like a cigar conference.
That's awesome.
In that hall. Now, imagine 1,500 guys blazing up cigars, right? Because they're just giving them out like they're candy. It was one of the coolest things I've ever attended in that same hall, which is insane. And the displays for these companies, they're mass. They're like a city. Like Perdomo has a city of a display. It's not like a booth. And so I totally get it. You can really get lost in the place as well. But what was your takeaway, Jack? What'd you learn?
Just a high level of optimism, frankly, I would say a cautious level of optimism, but definite optimism at both conferences. Both were extremely well attended, and it seemed like people were making money. There was a lot of folks there, a lot of smiles, a lot of exuberance. So I think that there's definitely the sentiment that the country needs more houses, and that someone needs to finance those houses is like a strong underlying theme at both of those places.
Good news for our listeners. So let's bring back in Josh DeShong. Josh, it's great to have you back, man. Thank you for taking the time. We obviously know how busy you must be.
Absolutely, I appreciate it. It's always good to catch up with you guys.
So, man, we talked at length about Myers Home Buyers and your wholesaling operation on the last episode. Loved, if folks don't, if you're doing any wholesaling at all and you don't listen to that episode, you're really missing out. So go back and check that out. But man, you've developed this marketplace for wholesalers called Trelly, and my guess is that it was partly out of necessity, partly out of the fact that you're kind of a self-ascribed, techno geek, which I love. You mentioned your first computer. I can't imagine that it was a Tandy TRS-80, which I think was my first one from Radio Shack, Jack.
That's great.
I'm so old, man. I'm the oldest guy in the building for sure.
You want to have an Atari competition later?
All day. Let's. I think everybody's played Atari. I think even my kids have played an Atari at this point.
It's the best. So, Josh, talk about Trelly, the genesis of the idea, how it really fit in with sort of how you're made. And, we'll just jump into all of the details of it and where it is today and how your 20,000 folks that are investors that are transacting with you are doing great deals on Trelly. So let's get into like the very beginnings of it and how it sort of came about.
Yeah. So, I built a pretty big real estate team at Keller Williams, and I have an obsessive personality. So I obsessed over everything about real estate teams, the evolution of the real estate agent. I would, again, I'm a little bit of a geek, so I kind of would look into the history, how, the National Association of Realtors formed, and when the real estate commissions formed, why did they form, et cetera. And I had this massive history coming from that business and done thousands and thousands of transactions. And at this point, I started to realize something really interesting, and that was that real estate agents had started wholesaling like a lot. And that pattern has not slowed down. It's only sped up. I also saw real estate agents' commission getting compressed in the traditional brokerage model with your open doors and your offer pads. So it started to kind of seem like there's this, and then I realized I did some more research and I realized that there's over 100,000 people in the United States that wholesale real estate. That's a substantial amount of people, and that's a really hard number to peg. We had to do a tremendous amount of research to get to that type of a figure. But there's like this massive marketplace that already exists. It's just fragmented. It's inefficient. It's been around though. It's been around for 30 years. It's nothing new. Wholesaling is a pretty standard thing, and especially in your commercial real estate world, right? So it seemed like, okay, there is not a really good place for wholesalers and investors. The MLS and Zillow doesn't solve the same problems. The MLS, the real estate agent process, like, it doesn't solve the problems that the investor faces. The problem the investor faces is speed and ease of access to the deal. Especially if they're trying to like downtime on your capital is a really, really bad thing when you operate a flip business. And so I would do deals to keep my crews busy. I would do deals to keep my capital flowing, even if it didn't necessarily always make sense. So by buying from wholesalers, it kept my transaction flow, it kept my return at as high as it possibly could, right? So realizing, like, okay, there's actually this need for efficient wholesale operators. At first, I thought they were bad. I think there's a company, Sunday, that is wholesaling, but they're like the anti-wholesaler or something. And their whole mantra is like, wholesaling is bad. Sell through our platform, and we'll get you the most money possible. But what was interesting, we tried running a similar unique selling proposition to that, a similar USP to that. What was interesting is those homeowners didn't value the extra $10,000 or whatever in the same necessary, like in the same way you would think that a traditional homeowner that would go retail would. Those people wanted ease of access. They wanted something that was simple, that was fast, right? So you have all these different problems with a traditional real estate transaction and going the traditional route, and it's making this wholesale environment grow faster and faster. So there was a couple issues that we had as well. One is we sell most of our properties via a highest and best period of time. It's usually 5 days once we go under contract with that property. Originally, we were doing text messages, was how investors were submitting their bids on property. So we had a problem of just having a lackadaisical practice in terms of how we wanted our investors to submit their offers. And what was happening too is, 3 salespeople would all have bids. One of the salespeople was best friends with the acquisitions person, and then they would get together and they would talk about, like, hey, what was the highest bid that came in? Blah 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 blah. By putting it on this open platform, bids can come in at the last 30 seconds of the highest and best period, right? So we had that problem, and then we also kind of sat back and said, look, if this is real and this industry is going to continue to evolve, then why would it not take the exact same path that the real estate agency world went down? Because, like, people like to reference the Glengarry Glen Ross movie in sales organizations, right? What a lot of people don't realize is, like, that was a reality. And most people are familiar with the scene, but they're not as familiar with the movie. So I'll go ahead and give everybody this. The movie is about a real estate office that is selling lots that nobody wants. And they're calling people and telling them, hey, congratulations, you just won the chance to buy this lot. And they're doing all kinds of things to get these people to buy houses. That is real estate agents. That is the beginning of a real estate agent. Like, that is what it looked like, right? Like, it was do whatever you can to get a deal.
Sure.
And so we started seeing these patterns and thought, all right, let's build out a marketplace. Now, did not know what I was getting myself into, but that's what got us there.
And what year was this?
This would have been 2019.
Okay.
Yeah. So
Yeah.
like, talk to me about. I know that you've got some coding background, but I've got, I'll get a harebrained scheme every 90 days that if I knew how to code, or if I had like, developer team in house, we'd be chasing shiny objects all over the place. To my team's
Yeah.
chagrin. But how did you get the confidence to scope this idea and then move forward with with actually building this idea? Because like, I feel like people, a lot of people, lots of real estate investors have lots of ideas based off of the pain they experience. They come up with an idea and it's a software based idea and they have zero idea how to execute it, or at least that might just be me talking, but I don't think I'm the only one. But how did you actually go from being, a real estate investor who saw a pain point in the marketplace to scoping and then executing on that idea?
Yeah. So I would say my CTO is Steven. You've met Steven Jack. Steven is he's special. He is he I think at 20 he was, or no, well, how old was he? At 20 he was hired by Microsoft, and then he was hired by Google like shortly thereafter. And he's pretty brilliant. And so, to be just very frank, I don't think I would have had the confidence to build anything without him. I know tech. And I think, remember in the last show I was talking about how my inexperience served me as a benefit, and I would say that my experience can serve me as a disadvantage in that Stephen genuinely knows a lot more than I do, a substantial amount more than I do. And when I met Stephen, I knew enough to ask him questions to gauge that he knew a substantial amount more than I do. But I could not actually determine his level of brilliance, right? It was just like so there. And so without him, I probably wouldn't have pulled the trigger, in all honesty. And even if I I knew a lot of technical people. I knew people that could code, and I knew people that could probably build product, but he had the ability to really pressure test other people. He had the ability to actually hire other people that I could not. He it cut out there for just a sec, but he had the ability to just pressure test things that were out of my league, so to speak. And so one, I would say, is I had this new knowledge, that was attached to me, and that gave me a lot of confidence, of course. And then, honestly, like, I've made a lot of mistakes in my career. I started in this business at 17. You just got to take action. And so, if it wasn't software, because I didn't have the technical prowess or the technical team behind me, then it would have been something else. It would have been building homes or something else, if that makes sense. You just got to take action and keep growing. Otherwise, you're dying.
So for those who are listening and who have not been onto the platform, explain to them what they would see, what they would see from sort of the forward facing part of it, what exactly Trelly is and how it is the platform for wholesalers.
So Trelly our focus right now is on Texas. You can list a property anywhere in the country, but there may not be any buyers there. But in Texas, we've got quite a few active users. Trelly looks and feels similar to a Zillow. You go on there, you're going to see a map. You can zoom in to the DFW market. You can click on different properties. Yellow properties are sponsored, so those are either partners or they paid a $50 premium listing fee that gets more exposure. Purple, the purple icons, those are free postings that wholesalers put up. And last year we did about $700 million worth of wholesale posts on the platform, and which is wild because it's up from about 400 million the year prior. But we were in more markets the year prior, so we focused really heavily, and we've just grown quite a bit in the DFW market.
And so basically you all go out, you've built the platform. How do you then get the word out to all of the, sort of better wholesalers in the DFW market that this is the place to market your properties?
Yeah, that's the hardest thing about a marketplace, because it's called the chicken or egg problem.
Right.
If you have supply or demand, right? You have eBay, people have no incentive to go post their items for sale because nobody goes to the website. And then how do you get people to go to the website when you don't have items for sale? So it's this chicken or egg problem. And that was where, our wholesale brand served as a seed. We seeded our platform with our own inventory. So
Right.
we gave buyers a reason to go there. And as buyers had more and more of a reason, they started telling their friends, and then their friends started telling their friends who were wholesalers, and then wholesalers started signing up and posting theirs. And so the more, and like we don't do any marketing with Trelly. Trelly, we're completely focused on how do we make things go faster and spend as little money as we possibly can for the wholesalers. So we spend no money on customer acquisition. So the more sellers brings us more buyers. The more buyers brings us more sellers, and it's this like never-ending spiral that once you get going, it doesn't stop.
What's the
Jack?
revenue model for you guys? You charging a commission or a fee or something?
No, so we only charge a sponsorship fee if you want additional postage. We were going to do lending. I think we talked to you guys about that. That was going to be kind of our focus, and then the lending market got really choppy.
Yeah.
And we had we decided to kind of backpedal. The big thing you don't want to do with a marketplace is you don't want to add premature friction. You don't want to give the user a reason not to do business or to do transactions. And so there was a time when we were considering, hey, posting a posting fee or a marketing fee or whatever. But honestly, the network effect is what that chicken or egg problem is called. Once you solve that effect, it's not strong enough, and so you don't want to add any kind of monetization until that happens. Once we get to where we have network effects, we're going to probably just be a portal for services. So connecting lenders to borrowers, connecting renovation crews, appraisers, things like that. We think the next theme that we're going to probably focus on is this like out of state investing demographic. But like we're not there yet.
And so not only have wholesalers found Trelly organically, but the buyers as well are finding it. That's amazing. And you've got 20,000 active buyers, you said, on the platform currently.
Yep.
Yeah. Well,
roughly 20,000 users. The makeup's probably 90-10. 90% are buyers and 10% are roughly wholesalers.
Right. Got it. And so it feels very mature. It feels like a fairly significant network at this point. Are you in the stages now where you're thinking about implementing some of those services, or are you still sort of like holding off on that?
We're going to hold off as long as we possibly can. And really, we will not start monetization until it's a national platform. It's got to have some inertia before you add any of that friction. So yeah, right now, it's just something we've got going. It helps us. It makes a little bit of money, but it ultimately kind of pays for itself, and it's our 10-year play. We think it's inevitable that wholesaling is going to become more democratized. It's going to become more standardized, and practices like even consider this. Real estate agents have a buyer's agent commission, right? A BAC. What's been happening with our marketplace is my people are selling other wholesalers inventory. Other wholesalers are selling our inventory. How do we cooperate? So like there's still a lot of like philosophical questions that we believe need to get answered about like how the industry should look. And if we rush monetization without answering some of those questions, we run a big chance of running off the rails. You know what I mean?
Mm-hmm.
Absolutely.
Is it an auction environment?
It's very similar to an auction environment, yeah. But the reason it's not an auction is we are selecting which bid we're going to actually go with. So, like for example, if let's say on a property we have a 300 and a 305, but the 305 is cash and the 300 is hard money, or the 305 is hard money and the 300 is cash, maybe we go with the cash buyer.
Mm-hmm.
So we reserve the right to be a little subjective at the very end, but we generally run it like an auction.
Gotcha.
How do you not run into hurt feelings there?
Oh, we do. I mean, but by creating standards and like sticking to them, you have to do, because then everybody knows how to play your game. People only get mad when the rules change in the game. But if you explain the rules up front to everybody, it's not a problem.
What's your view of Sunday as a business model, and how are you guys philosophically different?
I thought it was a great, like, I like their business model. I don't like their approach, and I think that their approach is more centralized, and I don't think that wins ultimately. I think the Sunday value proposition is strong. We actually we shifted our entire Myers Homebuyers business model, and we gave that business their model hell. We tried to make it work and make mathematical sense and see like some kind of like potential promise in that unique selling proposition. But what we found ultimately was, the homeowners who sell their homes to a home investors did not sell their home to a Sunday. They would not sell their home through Myers, where we only take a commission. They wanted quick and easy, and they really could care less about leaving money on the table. Here's how this went. We went to a house and we asked the owner how much he wanted for it. And this was one of many. I went on dozens and dozens and dozens of these appointments. And we asked the homeowner, he said, how much do you want for this house? And he said, I'll take $330 right now. And we said, hey, we have a process that we think will get you a lot more than $330. Would you give us 4 days to see what we can do? And he said, yeah, sure, whatever. And we come back 4 days later and we give this guy a $430 offer. His response is, oh, cool. And I'm like, what? He didn't give a shit. And I saw this time and time and time and time again. And so getting out there, being in the field, I realized I think Sunday is on to something in terms of the value proposition. The problem is I don't think the people that they were trying to target actually give a shit about that value proposition. Pardon my French, but that's my take on it. And that made me pause, and that made me sit back and go, okay, it is these third parties, right? It is going to be this democratized real estate agency type of model. That's what the future of wholesaling looks like.
Yeah, it's really interesting. I had a harebrained scheme before I knew that Sunday existed, which was very similar to Sunday, and it's different operational in some respects. And I've pitched my team on it, and they think it's another one of my shiny objects, and I can't get anyone to bite. But it's focused on but my premise is focused on the idea that that real estate agents aren't going to work houses that need work. That's just not what they do. They don't have construction estimating. They have a hard time coming up with value because they don't know if it's 30 or 50 or 70 that the house needs. So the real estate agent community doesn't serve that market well, and which is why wholesalers exist. But any business model that is predicated off of an asymmetry of information is a problematic one, right? I just also don't think that's what's going to win. But so the idea is basically to have like an auction model, but for houses that need work, where we try to make it as painless as possible for the seller, but put the property into an auction environment where investors are bidding on that house, so that it's ultimately a smooth closing process. But I get your point about
And that's the Sunday model. That's what Sunday does.
Yeah, it's very similar. It's very similar. Some of the ways that they've executed are different than what I had drawn up in my head. And then I pitched this idea to somebody actually who is like one of these like people you can partner with, and they'll help you, like, they can do the tech side of things. They can help with different aspects, but they need someone to be the CEO. Someone I met through CG actually. And so he's like, "Oh, you mean Sunday?" And I was just like, "What's Sunday?" And he's like, "Go like SUNDAE, just like go type it in." And I'm like, I was pissed. I was like, God damn, when did he come up with this idea? Like, he was a year ahead of me. And I was like, all right, well, I don't like the way that he executed certain things, so maybe I'll still, keep it in the back of my mind. But that centralized idea though, versus what you're talking about. Your point is that, like, trying to jam the whole world into one centralized location is difficult, and they may not care. And frankly, also scaling it, you probably like the service level that you get when you have, when you're trying to serve the entire country that way, it's a materially different experience, seller experience, than what you're talking about, which is the wholesaler can provide the, figure out the specific pain points, solve those personal pain points, be the problem solver and solution provider, and just bring that deal to a centralized clearinghouse, which is, it's a fundamental difference from philosophically as to what you think, where we think the world's going, or not where we think the world's going, but where you think the world's going versus the way that Sunday's executing it. But I do agree with you that, like, where we are right now doesn't make any sense. Like a fragmented market based off of asymmetries of information is just like, this can't be where we're going.
No. And the reason I have so much conviction behind this real estate agent narrative is, like, real estate commissions across the country are starting to force licensing to do assignments. Virginia just did, Oklahoma, I want to say Illinois, Texas. Texas, I believe, is, I don't know, we require all of our people to be licensed. It's kind of just becoming this. So now that the behemoth, the 1.2 million National Association of Realtors, that giant trade group is feeling some pain, and they're feeling disrupted. It's got these agents out going, okay, what else can I do? And a substantial amount are diving into this business. And here's the thing: there's not one example that I've been able to find of a centralized power beating a decentralized one, right? Like, we could go talk about blockchain and cryptocurrency all day long, but, like, decentralized systems work better than centralized systems. And so if you take this massive decentralized system and now it's forced to get into your industry, I don't think any centralized business can win that way.
How do you protect yourself? Look, wholesaling can be a guy who took a 3-hour class on the weekend and spent $197 how to learn how to wholesale, or it can be a super sophisticated operator like yourself with Myers Home Buyers. And so now you've got these, that strata of folks, if you will, putting deals up onto the platform. How do you protect yourself from sort of unscrupulous operators and, all of the things that we know that can go wrong in a transaction?
So with my Trelly hat on, ironically, I have a Myers hat on, but
you want to stop the podcast and go get your other hat?
Let me go get the Trelly hat and
Bad
put
branding,
that on.
man. Come on, get with your branding.
So there's a couple things. Obviously, terms of service, there's waivers of liability, and all of those types of things. We've added features and functions to try to keep quality of buyers and sellers as high as possible. So, for example, we require real phone numbers. You can't use a VoIP number to register for Trelly. We have we used to have a verification platform We actually discontinued it because it wasn't really getting used as much as we thought it was. But we would check your driver's license against the National Public Database to verify that you were who you said you were and everything matched. The other thing we implemented was reviews. So the more somebody actually transacts on the platform, the more reviews they'll have. They'll be prompted to give those reviews. So we added those kind of things to like let the marketplace do its thing, but we are not, and we have some other things that protect us from the Nigerian princes and that type of stuff. Ultimately, it's definitely still something that we have to come up with a long-term solve. Two-factor auth, different things like that we can definitely add, but again, it kind of goes towards that same thing as not adding monetary friction. You could add just usage friction, and the harder you make something to use, there's a cost to that in somebody's mind.
Sure.
Like we all have, our time is our money, and even if we didn't have currency, we would determine whether or not we were going to do something by the level of effort it required. And so by adding more steps, you create friction. And so it's one of those things you have to just be very, very cautious and careful of, I think.
Yeah. What's the upside that you're seeing in terms of like the average wholesale fee from a person that would just go out there and sort of market it on their own versus putting it on the platform?
Yeah, so we actually tested this a few years ago. Back in 22, we tested this, and we found that you'd make about 60% more.
Wow.
If you use the platform and you use a general auction process. So there's different ways, like across the country, properties are sold differently. Most wholesalers, like the original wholesalers, would just throw a price. They'd say, "Give me 10 grand and I'll assign this contract over to you."
Sure.
But now what's becoming the norm is more like a marketing period where they're going out, they're putting the deal out, they're letting multiple investors see it and say, "Hey, here's what I'll pay you for it," or whatever. And I think if you divide the wholesalers that do one type of business versus the other type of business out, you get a very, very different answer. So the wholesalers that are doing those showings, they're probably getting about $15,000 to $25,000, depending on where you're at around the country. The ones that put on that fee, they're probably averaging closer to $10,000 to $12,000, is what I would say.
Jack, as a guy who's bought many houses over the years, I know that it's never fun to be in the horse race, and it was always fun just to get a call from a wholesaler directly, rather than having to compete with 50 other guys who are kicking tires, and some of them are not serious. And so you make the argument to the wholesaler, "Hey, one call does it all. Just give me a price, and if it works for me, I'm in." I wonder, I think your idea for the marketplace is awesome. I wonder about the sort of the deal. Look, there's plenty of rehabbers out there who'll take a deal and make 20 grand all day long. I just wonder about the quality of the deal when you get so many people bidding it up at the end. Who's the guy making the most? Is it the wholesaler who really has little risk, or the rehabber who's taking all the risk, right?
Yeah. I mean, Jack, you can. I just want to throw in there, like, I get that. Like, it's an issue. Your big buyers like Jack, your incumbents, right? They're not going to like to see the change that's happening, but it's not a change like we're driving. It's just what's happening.
Oh, sure.
You know what I mean? It's like, and naturally, Jack, you know this, like, there's efficiencies of scale that have to be obtained. And as the industry becomes bigger and bigger and more systematized, margins are going to compress.
Yeah, I completely agree with that. Yeah, margins are going to compress. And also as you scale, I don't like, I'm a big open door and offer pad hater, because my experience is that flipping does not scale well. Like as you scale, it becomes harder and it becomes less and less efficient. So the argument that, hey, we're going to make it up in volume on flipping, I'm like, no, you're going to lose more and more the bigger you get. Like I just don't I don't follow that logic, or I don't that logic doesn't agree with what I have experienced operationally myself. But at the end of the day, markets don't give a shit, right? Like the market's job is not to make my company at scale make money, right? It's to find an efficient place in the market. And frankly, if the system becomes a place where wholesalers can easily transact with confidence to the person who's willing to pay the most, ultimately the consumer, the seller, is the one who's going to get the most money for their house. Yeah. And that's really the equilibrium in my mind, is like when we figure out a place where the little old lady doesn't get taken advantage of ever, and she gets the most for her house, that will be the point of equilibrium, not where a company can scale their flipping business. No one gives a shit about that outcome. So I just think it's the question in my mind is what's the right path to getting to that point. But I agree. The inefficiencies that have existed in this business and that existed even much more 10 years ago and 20 years ago, they're continuing to erode, and that's the nature of capitalism. That's just a survival of the fittest thing. So,
well, and there's just a peek behind the scenes where, like, on our roadmap, we want to get to the place where we can actually tell you as a wholesaler what to pay for a house, or at least what the house will sell for on our platform.
Mm-hmm.
And that way you can, when you're going to buy the house, you're effectively determining how much you want to make.
Right.
And so what's going to end up happening is the sellers are going to end up, the homeowner themselves, they're going to be the beneficiaries of all of them. Well, we're all going to be beneficiaries of it, but they're going to be the ultimate beneficiaries of it, because it makes its way up the food chain. Now these wholesalers are, because of efficiencies, are able to pay that homeowner more money. And so, yeah, it sucks. The days of making $100,000 a deal, that's gone. But it is what it is. Like, this is just what happens in markets. It's every market in the world it's happened to.
Yep. I agree.
So tell us, in a few minutes here, what's on the horizon? What's your 10-year hope for the platform, and folks who are in the DFW area who are using the platform, and maybe elsewhere as you expand? What can we expect from Trelly?
Yeah, so we have about five different products, I think, really, that we're building in stealth mode right now. We're using R&D for our Myers business, what you talked about earlier. So one of those things being like the lead routing and lead scoring. Our mission as Trelly CEO, my mission is to enable this market. My mission is to make it easier to be a real estate investor, make it easier to be a real estate wholesaler. And I would say that's actually my mission in both businesses, in Myers and in Trelly. It's just how I'm going about them. I'm doing it very differently. If that makes sense.
Sure. Well, it's been a great conversation. I'd like to just point out to everybody once again that when Jack and I bring on guests like Josh, it's only because Jack had a relationship. We're fascinated by the business and how you've scaled it. We make nothing from helping you talk about the platform for the last 90 minutes, and that's exactly the way we'll keep it. But for folks who want to learn more about Josh DeShong Real Estate, Myers Home Buyers, and Trelly, how would they find you online, Josh, and how would they find the platforms?
Best way, you can go to Trelly.com. You can go to MyersHomebuyers.com. Add me on LinkedIn, Josh DeShong, or Instagram, Josh DeShong RE.
Last night, as Jack and I were enjoying probably our second or third glass of bourbon, he referred to you as one of the smartest guys he's met in the business, which is kind of scary coming from him.
No way.
But had nothing but great things to say about you, and I can't thank you enough. You proved him right. It's what a trajectory.
Well, guys, I would say the exact same thing about Jack. I think I probably have. So I appreciate that very, very much. And it's been a great journey, and I love sharing my lessons because, again, I didn't know everything when I started, and I still don't. So
yeah, thanks for hopping on, man. Really appreciate it. Really appreciate your time this morning. Thank you.
For sure. Absolutely. Thank you, guys.
All right, folks, it's Real Investor Radio with another 2 great episodes. Leave your comments. Tell us what we're doing right. Tell us what we're doing wrong, how we can get things better. We'll take a listen. And thanks for tuning in. This is Craig Fuhr, Jack Bevere. We'll see you on the next one.